Hello and welcome to this edition of Closing Trades with me, Aisha Faridi, Snehi Shah with me, and we're coming to you live from the ET Now Motilal Oswal studios. Let's just take stock of what the market is up to because somewhat of the selling seems to be abated while we've still not given up on the intraday volatility, and volatile it continues to be. But a much more resilient broader market. I think that's the biggest takeaway from today, and the breadth is now holding in the positive. About 152 is the count within the F&O universe, standing to the green right now. So what's holding up? You've got a BEL, L&T, Hindalco, iShares. These are the names which are looking good from within the Nifty and the large cap universe. There's L&T, which is now almost knocking on a 2% gain. BEL, which has been fairly beaten down in the last 1 month, that's made a comeback of nearly 3%. Hindalco is looking strong. There's iShares, and then there's Axis Bank and ICICI Bank as well, which are propelling higher. ONGC2 is seeing somewhat of a follow through from its move yesterday. But the broader market, that's where all the lively action is. Look at a BSE, that's spur up about almost 7%. RBL Bank is holding higher by 6.5%. HFCL has been a strong show from the word go, about a 5.25% uptick there as well. Union Bank higher by 5%. And then IRFC as well, which is looking good by about almost 4.5% as we speak right now. But Snehi, that's not quite the case with the technology names at least. And Infi clearly is a newsmaker today, isn't it?
Absolutely. Lots of news flow coming in when you take a look at the entire IT space as well. That counter has been in focus. One of the biggest, in fact, the biggest loser on the street today is the Nifty IT pack. A 1.5% cut coming in on that pack entirely. So not looking good for the likes of LTI, Mindtree, TCS, Infosys, L&T Tech, HCL. All of these stocks are lower by anywhere between 1 and 3.5%. So big cuts coming in across the IT pack. You have Pharma also that's trading with cuts of 1%. Auto and FMCG continue to lag towards the red. Realty, surprisingly, is the biggest winner in today's trade, and it's surprising because of the kind of moves that we've seen coming in across this index over the last couple of months. But you have positive notes coming in on Macrotech, which is Loda. Jefferies has come out with a good note on that, so that is a stock to talk about. That stock had seen some good gains earlier in the day, but it's fizzled out right now. Nonetheless, almost a 1% gain coming in on Macrotech as we speak on the back of this Jefferies note. So looking good for Macrotech. Mahindra Lifespace also has inked a project worth 1,650 crores in GDV. So that's also looking good for Mahindra Lifespace. That stock also not doing all that much in today's trade. But that's the reason why Realty is in focus today. Energy, Metal, PSU Banks, Nifty Bank. These are all your gaining sectors. But let's also highlight a couple more stocks in today's trading session that merit to mention. Aurobindo Pharma has been on the US FDA radar. They've pre-approved inspection at the Eugia Steriles in Andhra Pradesh, has come out with 5 observations after that US FDA checks. On the back of that, Aurobindo Pharma under some pressure today, a 3% cut coming in on that stock in today's trade. And Kalpataru Projects also, we spoke with the management earlier in the day, wherein they said that they expect Q4 to be a robust quarter and they expect top line growth anywhere between 12 and 13% by the end of this financial year. So it's looking good for that stock because that stock is up almost 4% in trade. But on that note, let's also welcome our experts on the show today. We have Kunal Bothra who's joining us in the studio, and we have Nuresh as well as Mr. Sunil Subramaniam joining us as well on the show. And Kunal, first of all, coming to you, help us make sense of the kind of market move we've seen today, because for quite some time, at least in the first half of the trading day, we were seeing a recovery coming in now, and now we're almost at the day's lowest point. Help us understand what's happening when it comes to the Nifty, because we have been seeing a lot of volatility every day. However, on the positive side, India VIX is 1% lower, so at least that's looking good.
Yeah, volatile it is, and I think till the time we see a change of reaction over the last 6-7 days, where we've seen consistent selling for the indices, and then more importantly, the market breadth being deteriorated significantly. I think if we see a change to that pattern, that would be considered to be at least a near-term break or a pause to the immediate sell-off what we've seen. We've also shown that over the last many weeks, that the Nifty has been holding on to that 22,800 mark. Today, I think was more or less the 5th attempt for the index. 22,814 was the low the Nifty spot has made today. So again, 4 or 5 attempts towards the index to try and retest towards a very strong support territory, and we've managed to bounce back today for the first time. And I think that would probably indicate that we could now be looking at a major support or a floor established for the index over the near term. What we need to now see is that for example, what we are missing in terms of the market move today is a lot of lack of follow through for many large cap names like Bajaj Finance, FinServ, etc. There are many larger cap names which have been doing pretty well for themselves over the last 3-4 days. these stocks have taken a bit of a pause. So we need to see that whether this is just a one-off day for these stocks or whether there is a pattern in the making. If we see large cap participation coming back in the next 2 days, then I believe that there is a very strong chance that the index may also see a follow through up move.
Okay, fingers crossed on that one. But Naresh, for now, it's looking like there's broader markets as well, which are making a fair attempt. Anything that you're spotting within the mid and the small caps?
So a good recovery in the mid cap and the small cap basket. Also, the breadth is very interesting today after a really long time. And we are seeing many stocks make a much larger move. The index would be up 2-3%, but there are many stocks which are up 5-7%. That's generally a good indication of a short-term bottom being in place. And we'll see selective slow recovery in the mid-cap space. A lot of stocks which have corrected where the numbers were okay. So something like a Bharat Electronics came out with good numbers, but the stock has corrected. Looks interesting. Same is the case with a lot of NBFCs. Whether it's a M&M Finance or a LIC Housing or LTF, they could have bottomed out in the near term.
Okay, I believe we've snapped that connection with Naresh. We'll try and reconnect with him in a bit. But Mr. Subramaniam, coming to you, good afternoon. Thanks so much for joining us on the show. Wanted your sense on the entire IT and Pharma pack because both of these indices are lagging in today's trading session. Of course, Pharma is also in focus on the back of the reciprocal tariff that Donald Trump has announced, and there is some conjecture around the tariff, and they're saying if it's a 10% tariff, it's going to deeply affect the EPS of a lot of pharma companies. So what is the sense that you are making of this sector, because all of these defensives, rather IT, Pharma, FMCG, they have not been doing all that well in the last couple of weeks?
So I think that's more a function of the domestic buying or lack of buying thereof in those spaces, right? FIs have been selling continuously. Domestic fund managers are sitting on at least 2 lakh crore of cash. So where they are choosing to focus their buying is where those are reacting positively. And I think on the pharma and IT, till this Trump reciprocal tariff scenario gets clearer, I think they are staying away from it. On a longer term perspective, I'm still bullish on these because of rupee depreciation. I think there's also opportunities for mid and small cap IT companies from the AI consulting space. There's also opportunity for pharma. From the generics, from the API. If China is going to get a higher tariff, then there could be some shift to India. So it's an interesting play to watch. But I think that the fact that the reciprocal tariff, the calculations are happening, and from 1st April they're going to kick in, that uncertainty is making domestic funders stay away from this. But otherwise, I don't see that over the medium term. They are continue to be safety packs where I would say that some amount of allocation should be there.
Hi there, welcome back to Closing Trades. We're live from the Now Motilal Oswal studio. Let's keep it going about the market discussion today and get a little stock specific now. Kunal, I want to come to you with a particular stock in focus, and that's ABB India, right? After their earnings, the stock was shooting up, but after their con call, the stock was lower by 6% yesterday. And today we've also got a couple of downgrades coming in from brokerages. It's not looking good at all for ABB India, although however it's managed to be rather stable today, just a 0.5% cut coming in. What's the outlook on the charts for this one?
No, I think at 5,000 levels for ABB India, it could actually turn out to be a good contra buy because the stock is almost at a 40% divergence from its longer term averages. Now, for example, 5,100 approximately is where the stock is trading. You have the 200 DMA, which I think is trading at 7,500 for ABB. That means a divergence of almost 2,400 points for the stock from its longer term averages. These are very steep divergences when you look at stock prices, and we've also seen that yesterday the volumes were pretty much on the higher side for the stock, but then today's downtick is not incrementally high for ABB, which means that maybe over the next couple of days you might actually expect the stock to form a near-term bottom. So I think in case if the stock happens to dip down closer to that 5,000 mark, that could actually be a very good level for a contra buy.
Okay, that's that on ABB. Just want to mark what's happening within the realty pack today. And macrotech developers, Jefferies came out with a note this morning giving a target price of 1,600 rupees. They're saying there's high visibility on 20% pre-sales growth and 20% ROE trajectory. That stock holding up a good 1.5%. They're saying the Palava land valuations are going to provide an upside, and they're scaling their premium inventory when it comes to Palava. Higher pricing, lower finance costs will drive up margins according to them. Sunil, while realty, of course, was one of the key sectoral winners from last year, these prices also have come off in the recent correction in the market. Wanted to understand if you're spotting any trends within realty, if there's anything looking good for a buy or an ad.
I would still look at premium housing. That's the company which are focused on that segment, because I don't think affordable housing is going to recover in a hurry. I know that there was a lot of giveaway and people's EMIs will go up because of the tax giveaways during the budget. But I still need a lot more needs to be done. I think EMIs haven't dropped yet. So affordable housing is still something the K-shaped recovery will continue to sustain. So I would say that anybody who's developing premium properties, I would still back them. And I think you're right that from September on, the realty pack has corrected about 15-16%. So a lot of selling has happened when the FIs have been selling. I think the cascading effect of that has been hurting realty. And so selective developers who are focused on the high-end premium segments is where I think there's some value today, little bit.
Okay, Mr. Subramaniam, just on that note, extending that point, in the recent MPC meeting, we've seen a 0.25% rate cut happening. The rates have come down, and it said that it's going to boost demand for home loans as well. Also, the consumption, Philip, that you spoke about in the budget is expected to give a little bit of a leg up to the entire real estate space. On the back of this, while we were talking about affordable housing, what are you making of some of these housing finance companies? How are they looking right now?
See, for the housing finance companies, the problem is that their long-term costs of borrowing, right? They have to come down for them to really pass on this rate cut. The rate cut is at the short end of the market. So at the long end of the market, there still isn't that much of an easing. And so from a market share gain perspective, somebody could reduce EMIs a bit, but it's going to be a lose-lose game. So I think that a lot more needs to happen in the economy for their costs to come down. And then only they can afford to really drop the EMIs, the rate of lending, and give a boost that. So I still think that with the 12 lakh as the sweet spot, right, from the budget perspective, that's still people who can, if you say, if they're earning 12 lakhs, right? And then you can say about 40 to 50% is what they can afford as EMI. Then you're talking about 5 to 6 lakhs per year. So at that sweet spot is where there will be action, but that's not a large part of the market. And that's why I don't think at the affordable end is really going to make a big difference. It's still people upgrading from 2-bedroom to 3-bedroom, people buying second homes on the outskirts of the cities, which are much larger. It's still the premium segment which will come into play there. I don't think yet there's enough happening on the interest rate front for a mass affordable housing pickup to happen.
Kunal, anything within realty that's looking good for a buy?
Yeah, I think DLF, Godrej Properties and Oberoi Realties are the three names which I was looking at in terms of the divergence from the averages, the bullish the RSI divergence on the setup for these stocks on the daily charts, as well as the slight increase in volumes for these names as compared to the previous leg when these stocks were going through a correction. Now that indicates that maybe we could be at a point where many of these real estate stocks could be at a short covering mode. So I think purely from a trading play, say over the next 1 week, 10 days, I would probably be looking out for these three stocks as potential candidates of revival, and maybe expecting a 5% to broadly 7 to 10% kind of a rally from the current levels.
Okay, so that's on the realty pack. Naresh, coming to you, want to get your sense on the entire PSU banks basket, because if you take a look at that on the month-to-date basis, that index is lower by around 6%. Do you believe this correction is good enough for maybe a relook at some of these names, and what are you liking from the PSU basket?
So the first fact is, if you look at the PSU bank basket, majority of them did not make new lows, like what has happened in the small cap indices as such. So something like a Union Bank of India, the lows back in January were closer to around 100, 102. The stock made a bottom around 108 yesterday, and I started reversing. So relative strength finally being seen here. There is no downward momentum to be sharp, and they've already corrected 30-35% from the top majority of the names. So Union Bank of India looks interesting. Similarly, Bank of India, Bank of Baroda all look interesting for the same reason. They're trying to make a base and could make a comeback from here. Even the largest one, State Bank of India, did break below the 720 mark, but did not see any follow-up selling pressure. But for that, I would wait for a sustained move above 740 to call a reversal there. But Union Bank of India, Bank of India look interesting at current levels.
Okay, those are some banking names from within the PSB pack. Let's just take a look at what RVNL is up to. Their joint venture has bagged an order for construction of 9 stations, the value at about almost 554 crore rupees. There's TTK Prestige as well, wherein there is a 500 crore rupee board approval for commitment towards operational and capital expenses. And then, of course, there's L&T, which has acquired the remaining 26% stake in their arm, L&T Special Steels, for 170 crore rupees. A bunch of these stocks are the newsmakers. L&T, of course, looking good. A 2% move is what you're seeing on the stock right now. Sunil, where else would you feel that the correction is maybe getting close to over or behind us, and these segments are looking attractive now to start at least nibbling into?
I think the capital goods space, right? I think I see that a lot of correction has happened there. Now, while things are not yet turning around on the demand front, I think if the consumption plays through, then you will see private capex picking up. And I think government 2 quarters of slowdown on capex, it also is due for a reversal. So I think the market has a little bit overreacted to the capital goods side correction there. And I would say that looking at each company and what kind of orders they are likely to get, a selective value buying is emerging in the cap good space, especially in the mid and small cap space. So I think that's the place where I think a correction has really helped them get closer to a bottom, if I may say. But you still have to have a 6 to 9 month outlook in buying these. I don't think a real short-term bounce back is on, but I think they are closer to the bottom. So it's a safer bet to keep accumulating them now over the next few weeks.
Okay, Mr. Subramaniam, on that, we'll let you go. Thanks so much for sharing your market outlook with us. But time to get in some closing trades then. And Kunal, coming to you, what's looking good? What's your closing trade for the day?
So I'll go with the banking name, and on the private sector banking side, it's HDFC Bank, stock which I think is trading at 1700 thereabouts. Looks attractive. The stock has been holding up above its longer term average.
Okay, HDFC Bank looking good to Kunal. Nuresh, what about you? What's looking good for the closing trade today?
So that would be a buy on Voltas. The stock has seen finally a reversal today, a good 3-4% recovery. I would expect it to go towards 13.20, 13.50 in the short term.
Okay then, so Voltas for Nuresh and HDFC Bank looking to be a attractive closing trade for Kunal. But on that note, we'll slip into a short break and we'll be right back on the other side to talk more about markets.
Back with closing trades right here on ET Now, and we're holding okay so far at least. We are around that 22,938 print when it comes to the Nifty futures. There's BEL, L&T, Eicher, Axis and Tata Steel. These are all names which are holding out well. ONGC, ICICI Bank as well giving due contribution. But look what's happening within the entire mid-cap banking space. RBL Bank has now spurt up a good 6.5% as we speak. I can see a big move on Union Bank as well, which is holding higher by nearly 5%. And BSE, of course, has been a very strong show, 7% higher on this stock, along with IRFC, which is also looking strong by a good 4.5% as we speak right now. Devang Mehta too joins in on the show to talk about what he's making of the markets right now. Devang, hi, afternoon. Has the time come to buy? And if so, would the tilt be towards large caps? What's your recommendation?
Good afternoon, Aisha. Thanks for having me on the show. I think, yes, clearly, these are times when I know that normally these are trying times when people feel that everything's gone. But the sense is that there was some bit of gravity and there surely will be bounces around. And most importantly, I think all the possible negatives seem to be priced in, and all the positives, right from the good budget to the rate cut to the Delhi election results to liquidity being pumped by RBI, plus the result season being decent. I think all this positives are sort of not priced in. So my sense is that at this point, when the valuations are probably getting a bit inexpensive, valuations are getting sort of quite, I think I can say reasonable, as well as price points are reasonable. I think here is the time that probably you should be ready with your list. You should revisit the portfolios that are already constructed. And there are great opportunities, I think, lying across the market cap spectrum. I'll not say only large caps, because there has been a severe correction across mid caps and small caps. And I think if you just paint the same picture as a overall market cap bias, it will be difficult. But I think there are a lot of deserving companies across in the mid cap and small cap arena where a lot of profit pools are also shifting. So my sense, don't keep a bias on the market cap, don't keep a bias on the sector, but great businesses which you wanted to buy have corrected by 10, 20, 30, 40, 50%. Just probably good time to start off accumulating them.
Let's say lots of deserving companies. If you could share a few names with us and our viewers, what's looking good, or at least the sectors which are looking good right now that merit a fresh relook after the correction that we've seen in the markets recently.
Yeah, I think clearly there are a lot of sectors which a lot of people would have missed out on. A lot of themes, if I can talk about that. So the entire theme which was related to power automation, semiconductor. A lot of people also talked about missing out on defense as well. There are companies which are proxy play towards capital goods ancillaries, engineering type of companies, manufacturing companies. Even if you look at the severe correction that has been experienced on the discretionary consumption side, be it hotel businesses, be it retail, organized retail businesses, be it even QSR. I think most of these companies have gone through a decent amount of correction on the valuation as well as on the price point front. I think the sentiment itself was so negative that even good numbers by most of these companies and decent commentaries have also got sort of punished because it was more of profit preservation that was done. So I think these are certain sectors, these are certain micro themes which one should look at while constructing a portfolio. Yes, overall your banks, financial services, and that also could be looked at. But I think the major money would be still made in a lot of capex related businesses and consumption related businesses.
Okay, so capex and consumption, Kunal brings me to a name, and I'm talking about Varun Beverages. That stock has hit its 52-week low once again after its earnings. Do you believe now would be a good time to start accumulating more of this now that it's at a 52-week low level?
Yeah, it could be a good time where, I think many of these oversold mid-cap names, they would actually start to find their feet back again. But then, what we need to see as a distinction is that whether you want to participate this as just a pure trading play, where you're looking at a bounce into these stocks, or whether there's a material change in terms of the price trends for these stocks. That's, I think, something which we need to see, because right now these stocks are into an oversold territory. The indicator conditions, the price conditions are much severe into these stocks. But then, eventually what happens is that these stocks are the ones which again fall lower after a period of bounce. So I would probably look out for an initial part as more of a trading play. I think at 475, where the longer term averages is closer to 600 plus for Varun Beverages, you might probably expect the stock to come back towards say 500, 525, kind of a trading pop of 8-10%. But then I think at those levels of 500, 525 is where one needs to assess that if the stock has not seen a major volume jump up, then this could just be about more of a short covering rally.
Okay, getting a little off highs though. It's definitely technology sectorally which is weighing heavy on the markets. We'll look at a DRL, for instance, as well. That's also cracked about almost 3%. There's Cipla, Sun Pharma. So Pharma and IT, you would have to say, are buckling under pressure. So the consumption names like Britannia, where there's chatter that that's going to be the one moving out of the index, that's also down about almost 1%. Maruti, Nestle are some of the other names which are also looking weak right now. From within the larger cap, or rather within the mid-cap universe, the broader universe that is, there's Oro Pharma, Zydus Life, Bata and LTIM, which are taking the knock. Cracks of anywhere between about 3.25% on LTIM to Bata down about almost 2.6% on the futures. Devang, what about the consumption space? Anything that's looking interesting there, where then you think perhaps negativity is in the price? And I'm talking pure staples here right now.
I think most importantly, we need to just recognize that most of the consumption names are still tad expensive than what they were. I think if you look at the volume growth of these companies, a lot of these companies, they are 1%, 2%, 3, 4, 5% type of volume growth companies, and they were trading at maybe say 70, 80, 85 sort of price to earning ratios, and that PE derating has happened over the last 2-3 years. But the sense one gets is that you need to have companies. I just hearing about Varun Beverages now. This which has shown remarkable growth across categories, right? Across categories on the revenue front, on the profitability front, on the expansion front. I think such companies should be looked at. Yes, these companies are again looking at a 52-week low prices. So I think this is the fear factor that is riding high on the market, which is making people push and sell this type of businesses. So yes, selectively one can probably look at staples, but as I said, more money would go into discretionary type of consumption, which I just talked about, the likes of the hotels, aviation, QSRs, in fact, retail, the type of jewelry companies, some jewelry companies, I'm not talking about all companies, but most of this are where patterns are changing, where consumption patterns, where spending patterns are changing. And I think one needs to just recognize that rather than even staples, one can probably go into this type of businesses.
Okay, so that's the take coming in from Devang on consumption. But let's put a hold on that theme right now. Let's just focus and talk about the insurance space, because we understand from sources that there might be delays in the insurance reforms to come into play. And my colleague Anurag Shah is joining us with all of these exclusive details on what could be causing these potential delays and what's the way forward when it comes to the entire form of insurance reforms. Anurag, take it away.
Major development related to the insurance sector, as insurance reforms are likely to be delayed. It was expected that in a second part of the budget session, Insurance Act Amendment Bill will be tabled and insurance reform would be reality. But now, insurance regulator IRDA has formed a 7-member committee to look few aspects of the Insurance Act of 1938. So it's a big development because 7-member committee is headed by former SBI chairman Dinesh Khara. Other members of the committee are N. Kannan, former MD and CEO of ICICI Prudential; Rakesh Joshi, former whole-time member of IRDA; Alok Mishra, MD and CEO of MFIN, L. Vishwanathan, legal expert, and Saurabh Shena, ex-ED of RBI. So these 7-member committee will submit a report in next 3 months. Then the recommendation from IRDA will be forwarded to Finance Ministry, and after that DFS will come again with a draft bill and will ask stakeholder suggestions. So this process was done in year 2022 also, in November 2022. So again this process will be done where the stakeholder suggestion will be asked after the draft bill will be introduced by the DFS. So insurance reforms are likely to be delayed.
Okay, some delay in insurance sector reforms is what we're gathering from our sources. But let's talk about IT as well. And, there's been chatter around Infosys announcing performance bonus for Q3. What's the quantum? What would be the bearing on the financials? Sumita Karir, my colleague, is here with all that analysis.
Infosys has announced its bonus payout for Q3 of 2024, which is for the period between October till December. In fact, sources also indicate that this is a 10 percentage points drop as compared to Q2 of 2024. In fact, sources indicate that the annual increments are expected to range between 4 to 6%. This is what some employees have been communicated by their managers. ET now reached out to Infosys for a confirmation on these claims related to bonus payout. However, there's been no response to that. However, ET now has accessed the email that's been sent by Infosys management to employees on the bonus payout details. In fact, this is, remember, coming in even as Infosys is amidst a controversy that's related to layoffs at the tech company. In fact, an employee union claims that at least 700 people have been asked to leave. However, Infosys has rejected those claims. It has said that close to 300 people could be leaving. However, sources also indicate that there is the final list that is set to come out. That final list will come out on the 24th of this month on the number of employees that will be asked to leave. So, of course, we'll be waiting out for all of those details to come in. Meanwhile, the employee union has written to the Labour and Employment Ministry at the centre, but the Labour and Employment Ministry at the centre has directed that query to the State Labour Department for further action on the matter.
Okay, that's the take coming in on Infosys right now, which, by the way, is significantly under pressure, as is TCS, LTIM, the entire technology basket weighing heavy on the markets right now. Bharti too languishing, about 1.6% lower there. There's a Maruti, Bajaj Finance as well, which is seeing some bit of pressure, 84.27 thereabouts for Bajaj Finance as we speak right now. But yes, cap goods definitely have made a comeback, and L&T and BEL are the ones which are leading the charge. Eicher is holding out very well. well. Axis Bank is looking good, and ICICI Bank as well is holding strong. Kunal, has there been a shuffle when it comes to the Nifty Bank composites? And, I recall earlier it was all about HDFC Bank and ICICI Bank. Is it now about Axis, IndusInd or Kotak?
Yeah, I think there's a change. There's a drastic change which has happened. So earlier it was ICICI Bank 2022-23, then followed by HDFC Bank in mid of 2024, when I think the stock came very close to 1900 levels thereabout. And then from there on, there's been a complete sea change. ICICI Bank became an underperformer. HDFC Bank became a sideways performer. But the stock which actually surprised from the September price corrections for the markets was Kotak Bank. The stock went up on a relative basis by 7%, 7.5% as compared to the other peers. And then start of 2025, I think we're seeing signs that where IndusInd Bank and IDFC First Bank, these are the two names which are actually showing signs of relative strength. Now that move is getting trickled into the other stocks, like for example RBL Bank, a stock which has been into a major downtrend, I think since the last 2-3 years or so, from 250 to 60 levels to 140-50 mark, the stock had made a low. That stock is also showing signs of a breakout above its 50 DMA. There is a range breakout which has happened for RBL Bank. So there are now signs emerging that the move which started off from those larger cap private sector banking names is getting trickled into the mid cap and into the private sector banking part. That I believe could probably help the move strengthen further for the banking index, and that relative outperformance sustain for a longer period of time.
Okay, just want to extend that point and bring in Naresh as well. Naresh, Kotak is at its 52-week high. Do you still believe that the charts look strong going ahead, or not time for some correction, because this stock has just emerged back from its lows? And of course, fundamentally also you have the RBI that's lift off its sanctions. So that's looking good for Kotak. And along with that, UPL is also another name that's just made its way into its 52-week high list. So give us your outlook on both of these stocks, Kotak as well as UPL.
So Kotak and UPL have been in the buy list for me. I've been recommending the same. So if you look at it from Kotak Mahindra Bank, in the short term, very clearly, 1900, 1950 was a problem for the last 3 years. 2020, 2021, 2022, 2020 highs were around this 2000 mark. And pre-COVID, the stock used to trade at 1650, 1700. So the stock has gone nowhere for the last 5 years now. So this is a 5-year breakout. Ideally, it should slowly and steadily go towards a new all-time high, make 2200, 2250, and then take a pause. UPL, similarly, the stock has gone nowhere from 2017. The stock was at 620, 630 back in 2017 for the first time. So the stock has gone through a 6-8 year period of no returns. In the near
with Kunal, with Naresh quite often. We'll just get that sorted. In the meantime, let's hear out market opinion from experts like Vikas Khemani and what he told us about what the strategy is in the market right now and how soon can we really see a rebound play out.
Policy pivots have happened. RBI has come out and started supporting liquidity, sort of also letting rupee sort of depreciate, which is good because it is kind of not tightening the liquidity from the system. Government has given tax rebate. Government has reiterated infrastructure spending. So all those things are good, in my opinion, which market right now is ignoring. And impact of these things will be with the lag. So I think that once this consolidation is over next 3-4 months and all the bad news are digested, I think we will probably start resuming a same phase latter half of this year. There's a lot of good risk rewards fallen in favor of banks, both PSU as well as some of the private sector banks, where I think matrices are decent. Of course, last 6 months liquidity kind of hurted them. Deposit, this whole tax rebate of 12 lakhs rupees will push more flows towards deposits, because fixed income and deposits become more attractive. So I think some of these policy pivots have really been good for this sector. And I think if you see 6 months, 12 months down the line, I think, in my opinion, this sector will outperform this year the most, including absolute returns. So, whether some in PSU names, some in private names, one can look at, but, that's one sector I would say this year should do pretty well. And it has also least impact from any global uncertainty which were to come. And it's a large cap sector, liquid sector. So I feel that that's where a lot of opportunity would lie.
Okay, that's the word coming in from Vikas Khemani. Devang, just want to come back quickly to you and get your sense on the entire auto pack because, you have the Trump tariff impact playing out from one side. On the other side, you have Tesla that's around its foray into, announced its foray into India in a big way. Rather, they've started hiring, they're looking for showroom spaces as well. Do you believe that both of these together could prove to be a double whammy for the entire auto space?
I think see there are 2-3 things which one need to look when one looks at auto. Most of the automobile companies and typically I think the passenger car vehicle companies are faring well. Be it Maruti, be it the segment of M&M that was doing well, and typically also Tata Motors in the EV space in India. Though a majority of the volumes of Tata Motors coming from JLR. I think there are 2-3 things which are going to happen. One, on the export side, if you are exporting to US, the tariff hikes is surely going to hurt you a bit. I think that is one point when we need to consider. The second important point is that while Tesla comes in, yes, there will be surely competitive intensity in India, which would increase. But I think the size of the opportunity in India is such huge in terms of our per capita consumption if we compare it to certain developed countries rather. Economies. I think there is so much of market space still to be created. So my sense is that that competition will be taken with an open heart. But yes, to tell you the truth, I think consumption part of it when the slowdown happens can slow down a bit. I think auto is one territory which one needs to look at. If the rate cuts are still going to happen over a period and the economic expansion happens, I think this will be a good sector. But otherwise, as I said, it will more be a neutral type of a behavior for us in the autos. Rather than that, as I said, we will focus more on the capex side or the manufacturing or the engineering side rather than being on the automobile side.
Okay, in fact, Shrishti is here to tell us about how those tariff imposition on autos is going to play out. There has been, remember, a lot of chatter around, especially the exports when it comes to Tata Motors, and not just that, the high tariffs that we also have for imported automobiles. Shrishti is here with the takeaways.
Well, yes, Donald Trump is threatening to impose 25% tariffs on all the imported automobiles in the United States, and that actually contributes to 8% of the overall import bill of the US when it comes to the auto industry. Now, before going to the impact on the India, let's understand that which are the major players that actually contribute to this import bill. In terms of the auto part component, then players like China, European Union, as well as Japan has the major imports into the US, as well as in terms of the car imports, then South Korea, Japan and EU are the major contributors. When it comes to the Indian markets, India is actually quite nicely placed in terms of the whole picture because our dependency on the US is very less. Out of the total import bill, India actually contributes to just 3% of the auto ancillary import bill, and in that as well the OEMs are definitely not expected to have a direct impact. The case in point being Tata Motors, that could actually have an impact amidst all of that, but that could also be an indirect impact. The picture here is that yes, JLR does contribute around 30% of its overall revenue from the US markets, but the key to note is that the particular production is not from the Indian markets, but the production happens in the European Union, and that actually gets exported to America. So JLR is one such company that is expected to get a hit if this tariff imposition comes into play. Other than that, onto the auto ancillary part, the key to note is some of the players that actually get impacted or have contributions coming in from the United States. Within the truck segment, we have RK Forgings that has around 30% of its contribution coming in from North America. Bharat Forge is another company because in their standalone, if we see, then 40% plus contribution comes around from the North American markets. And Solar BMW, another auto ancillary name which drives almost 60% of its contribution from the European as well as the American markets, in which over 40% of the contribution is coming in from North America. And analysts does believe that if at all this tariff is imposed even in the auto ancillary space, the impact is indirect, but it could be a pass-through cost for all these companies. So for India, the picture is that it could be a limited impact on the Indian auto players. Back to you.
All those details, limited impact on the auto space is what she's making of this Trump tariff if it comes into play. But let's focus to another sector of stocks, and that's the metal and mining space. And one stock in particular, Vedanta, has been in focus today on the back of the Economic Times report coming in that the company has secured 83% creditor approval for its demerger, surpassing the required 75% threshold. That stock is also holding up decently okay in today's trade, a 1% uptick coming in. Let's take it across to my colleague Ashesha for more details on this demerger that's at large. Ashesha.
Remember, according to rules, about 75% of the debt holders by value had to approve the demerger for it to go through, and now it has been approved by 83% creditors. Economic Times has reported citing sources, and this of course has come in as a positive for the company. Remember, demerger was approved by the board in September 2023. They've already received approval from both the stock exchanges BSE and NSE, and now a creditor's approval has also come through. This, of course, will analysts believe will be a major re-rating trigger for the stock. Remember, it was originally approved to be demerged into 6 companies, which later the company changed to 5 demerged company, and it will be done in the ratio of 1:1, which means every shareholder of Vedanta will receive 1 share of each of those 5 demerged companies. Vedanta Base Metals was also approved to be demerged earlier, but later the company thought that it will perhaps be not the right time to demerge at this juncture, and this will be done at a later date. So for now, yes, it's a positive news that has come in for Vedanta. And remember, not just a demerger play, Vedanta is also a dividend play. It has declared 4 interim dividends till now for the current financial year, totaling to about 43.5 rupees per share. Big positive news. The official notification, of course, is expected to come in over the next 1 or 2 days, because they have to disclose within 48 hours of the event taking place. But for now, we are getting to know from reports that this has been approved, and this will be a positive for the stock.
Okay, that's that on Vedanta. Stock holding up or closing in the green rather. But let's get into BTST ideas as well as before we wind up for the day. Kunal, what's on your list?
So I'll go with the buy on UPL, a stock which is perched at a 52-week high, trading about 640-50 levels. So look out for targets in the range of 675, and stop loss could be kept at 630. Expecting this move to continue for UPL. The second could be an interesting name. It's a buy on Jubilant Ingrevia. That's a chart which has come back into a big breakout, and it's also come back above its 200-day moving average when it crossed the levels of 660 thereabouts for Jubilant Ingrevia. So would look out for targets in the range of 710. Stop us at 650.
Okay, that's what's looking good on the BTST trade for Kunal. Before we start wrapping up for the day, let's just highlight a couple of stocks that have been in focus on the back of some brokerage notes today. Maruti Suzuki on the back of their HSBC note coming in, where they've maintained their buy with a target price of 14,000 rupees per share. That's looking good for Maruti Suzuki, because they believe that the e-Vitara specs versus price proposition seems rather favorable, and the EV launch targets are also in the affordable segment when it comes to Europe. However, note is positive, but nonetheless, that stock is slightly under pressure, an 0.8% cut coming in on that stock. Jefferies, once again, like Aisha mentioned on Macrotech developers earlier, it's holding up well in today's trading session. You have a Citi note coming in on the entire specialty chemical space. So a couple of stocks from that space are in focus today. Also, the auto space is in focus on the back of a Macquarie note coming in, wherein they believe that two-wheeler exports geographically look well diversified, and it's looking good across the entire auto basket. On that note, then, we'll just thank Devang, Kunal, Nuresh and Mr. Sunil for joining us earlier on the show. Let's start wrapping up on this edition of Closing Trades and take a look at what the markets have been like in today's trading session. Nifty is rather flat. We're ending with a slight shade of red coming in, but nonetheless, we're once again under that 23,000 mark, and it's a 120-point cut coming in from the day's highest point for the Nifty. So that's on the Nifty. Sensex also in tandem with the Nifty, ending very flat on the Sensex. And we've seen a 350-point cut coming in from the day's highest point. Advance decline ratio continues to be in the favor of the advances today. And on the back of that, we've not seen much movement happening in the India VIX. On the flip side, on the positive side, rather, India VIX has cooled off a percent further in trade today. So that's looking good. A 1.6% cut on India Weeks, which is keeping us below that 15.5 mark. Let's talk about the broader markets because they seem to have done a lot of heavy lifting in today's trading session. Nifty mid-cap is up 1.5%, comfortably above that 50,000 mark, rather at 50,500 is what the mid-cap index is. Nifty small cap, the real winner. Remember yesterday in yesterday's trading session, Nifty small cap was the biggest loser, and today that has reversed all of its losses from yesterday. Nifty small cap is the biggest winner today, a 2.2% uptick coming in on that index. Let's highlight some of the Nifty gainers and losers in today's trading session. A couple of these counters were in focus all throughout the day. Let's pull up the likes of a BEL 3.6% higher, Hindalco, Aisha, Axis Bank, L&T, ICICI Bank, Kotak Bank and NTPC. All of these stocks were, and along with Hero Motor of course, anywhere between 1 and 3.5% gains coming in across all of these Nifty 50 winners. On the flip side, Dr. Reddy's was in pressure. Of course, Pharma, Auto and IT have been in pressure on the back of the reciprocal tariff potential announcement coming in by US President Donald Trump. So Dr. Reddy's down 2.5%, TCS following suit with Infosys, HUL, Adani Enterprises, Bharti Airtel, Power Grid, Sun Pharma and M&M, all of them with cuts of anywhere between 1 and 2.5%. Let's take a look at some sectoral winners and losers in today's trading session. It's the realty pack that's outperformed, like the Brigade, Raymond, Godrej Properties, DLF, Soba, Loda. All of them have done very well in today's trading session, followed by Nifty Media. Nifty PSU banks have been holding up really well today. Union Bank, 4.5% gain on that front. Bank of India higher by 3.5%. The metals pack is also shown brightly today. Nalco has done very well, 4.5% uptick over there. This was followed by energy names. You had Nifty Bank that's ended in the green for the day. That one is also looking rather solid, a 0.6% uptick coming in, or rather in fact now it's built onto those gains, almost 1% higher is where we are closing for the day on Nifty Bank. On the flip side, IT, Pharma, FMCG, Auto, they continue to be under pressure in today's trade, but that's how we've shaped up for the markets today. Nifty is closing just above that 22,900 mark. Let's hope to see when we're able to break that upside resistance level of 23,000, and let's hope to see that soon on the markets. But that's a wrap on this edition of Closing Trades. Thanks so much for watching.